All right. Good afternoon, everyone. Thank you for continuing to join us throughout the day here at the Lytham Partners Fall 2024 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. And during this next presentation, we welcome Victory Clean Energy, ticker symbol of BYEY on the OTC. And joining us today from the company is the company's founder and chairman, Chris Hedrick. Before I do turn it over to Chris to walk through the presentation, I want to remind everyone that management is available for one-on-one meetings. I know we're sort of reaching the end of the conference, but if not today, be happy to coordinate these for after the conference as well. You can shoot me an email. That's Blum, B-L-U-M, at lythampartners.com, or visit the landing page for the conference. That's lythampartners.com/fall 2024. From there, you can click on the investor registration button to make your one-on-one selections. So with that, Chris, thank you very much for your participation in the conference. The floor is all yours.
Robert, thank you guys so much for having us. We greatly appreciate the opportunity to present here. Just a real quick overview. I'm a recovering hydrocarbon producer. Made the transition into hydrogen back in 2015. My company was actually founded in June of 2015. It was H2 Energy Group, and you'll see a couple of ghost representations on our slide presentation as we move forward. We did a reverse merger into Victory back in January of this year. It was an oil field tech company, and we have since changed the name and operations to Victory Clean Energy, Inc. And H2 Energy Group, which is the company I founded back in 2015, is a wholly owned subsidiary now. That said, we've got our forward-looking statements so that everybody understands that we're talking about opportunities in the future. We are absolutely a development company. Our technology's been around since 2009. I was the first outside investor in that technology. We just recently had a couple of press releases announcing that we had negotiated the acquisition of our underlying technology from a company called Proton Power Inc., which is based here in Lenoir City, Tennessee. And I'll give you an overview of why that's important and how we intend to deploy. But obviously, all that's subject to our disclaimer here on the front end of forward-looking statements, because there's no way to know what the future holds for energy. It changes literally hourly. But here we go. Let's jump in. Real simple. Our hydrogen is True Green. That's a trademark that we've established for our product. It's really a fairly simple process. We use woody biomass to make hydrogen. It is the most cost-effective, as you'll see as we progress through the slide, in this market. The market today worldwide for hydrogen is about 100 million tons per year. It's essentially as an industrial gas. It's not hugely deployed in any kind of as a fuel or in anything outside of industrial gases. We have started our first project along the I-5 corridor in California. We've partnered with a group out there called the Redding Rancheria Tribe, and we're building our first facility there with them. We have additional locations that we'll walk through as we progress through the slide here. But just keep in mind, the name of the company is Victory. The product is True Green Hydrogen. That's what we do. The market worldwide today is kind of targeted at about $141 billion. It's expected to grow over the next decade into north of 220, and we're seeing those numbers change once again almost hourly. It's crazy, the developments in this space just in the last couple of years that I've seen personally. We are now focused on essentially transportation. That's just kind of the low-hanging fruit. There's lots of folks in that space. The transition to industrial, which is where we think our sweet spot will ultimately be, is probably a year or two away from adoption. There's got to be some things happen in the industry space to require them to decarbonize. Outside the U.S., we are seeing it, but we are in the near term focused just right on the United States and Canada as our primary development markets. And in those markets, we're addressing the heavy transport market in California for heavy trucks along I-5. We're also working in the marine transportation business, and I'll tell you about Tampa in just a second. We've just had some initial conversations in the transportation or aviation transportation business, which I never truly expected to be a market, but it's actually moving as quick, if not quicker, than the other guys in the space, which are shipping and trucking. You'll hear a couple of different terms in the hydrogen business. One of them is gray. That's traditional hydrogen, and that makes up about 95, 96 million tons of the worldwide annual production. The balance of it is essentially blue or green, and the blue is essentially gray hydrogen that they use some kind of carbon capture and sequestration. Not a huge fan of that. I think it's a lot of greenwashing. Been in that sector for most of my life and understand just how difficult that undertaking is. The green hydrogen primarily is produced with electrolysis. That's kind of the accepted technology today. Our problem with it will be, you'll see here in just a second what the real issue is, but essentially it's just economics. They require an enormous amount of electricity. Our production cost today is about $1.91 a kilogram. There's some things in there that make up the lion's share of that. About 65% of our production cost is the amount of electricity that we have to utilize. The balance of it is our biomass and obviously just operation costs like labor and things like that, maintenance. Our competitors in the space are gray hydrogen. Remember, that's about 95, 96% of the world market at $2 a kilogram. There's some guys that say that they can produce it for less, but that essentially means that they have not capitalized or are not capitalizing the cost of the natural gas that goes in. Here in the United States, that's a fairly insignificant number, especially if you're producing it from your own wells. So there may be some guys who can produce it for under $1. I've seen as low as 70, 75 cents in some of the presentations that we've participated in. Blue hydrogen, once again, they're just doing carbon capture and sequestration on the gray hydrogen. Some on some renewable natural gas from landfills and whatnot, where they're pyrolyzing the renewable natural gas and turning it into a hydrogen project. That same thing, they're still having to do carbon capture and sequestration in that process. It's not terribly efficient, resulting in a kind of a higher cost per kilogram. The last is green hydrogen, and I mentioned that earlier. That's primarily electrolysis. Electrolysis is deployed in virtually every project that you're gonna read about in the near term. Why? It's just kind of the way that the investment bankers have processed the technologies. It's what everybody's been using. It's been around for 110 years. There's not a rush to move away from it. And primarily the idea was that they were going to use curtailed electricity and reduce their production cost. Well, reality of the situation is there is no such thing as curtailed electricity. And electricity becomes more difficult by the day with all the data centers and more recently AI. So we're watching kind of a hockey stick progression in electricity prices worldwide. It's not getting better, it's getting worse. So we have focused in on our technology, which is true green hydrogen. I mentioned earlier, it is a high yield pyrolysis technology. And what that means, it's essentially thermochemical decomposition of organic matter. In this instance, we prefer woody biomass. We've tested 150 different types of biomass. Some are better than others, but essentially for us, it's dead, diseased, and dying trees, or maybe specific energy crops that we've found that work really well for us. The technology is not new. It's been deployed since 2010. Essentially, pyrolysis means you're doing performing a thermochemical reaction in a space devoid of oxygen. So there is no combustion. If you don't have combustion, it reduces any of the noxious gases or problems that most of our competitors are going through in the traditional gray hydrogen space. One of the key takeaways for us, I mentioned the data centers and AI becoming a huge issue worldwide. We are self-powered. We don't connect to the grid anywhere. Even if they gave us the electricity, we would never do that. We produce our own electricity, which allows us to go virtually anywhere in the world. Here in the United States, we've not found anywhere that we can't locate a facility. West Texas, New Mexico, Nevada, Arizona, all have enough biomass to sustain one of our production facilities or multiples of our production facilities. So that's kind of our focus. This is just for the techies out there who want to better understand how the process works. It's real simple. We take a woody biomass waste product, we process it out in the field, or our suppliers do. They send us those chipped products. We run them through a mechanical sizing machine, get it to the ideal size for our facility. In some instances, we may have to do some moisture management if it comes in from a really wet area. We don't want to be any more than around 40% moisture by content. Goes into our system in the pyrolytic chamber, makes two products. One's a syngas, the other is biochar. I'll give you a little history on biochar in the next slide. But the primary product is syngas, and it's essentially 62 to 65% hydrogen-rich syngas by volume. We take part of that syngas and run it back through electricity gensets. We're working with a company called Hyliion that we're pretty excited about the prospects of their new technology. Happy to give you an overview of that if you would like. But we run it through a pressure swing absorption if we don't use it for electricity and generate hydrogen. There's a slight tail gas of CO2 that we run back through the system and purify it through the biomass as it goes through. So throughout our process, we are absolutely carbon negative in our production. The biochar that I mentioned is one of our co-products. Right now, we're looking at forestry residue, dead, diseased, and dying trees. In the future, we're kind of leaning towards energy crops like giant bamboo. Seems to have a really high grade biochar product and grows incredibly fast and sequesters enormous amounts of CO2. So that holds great promise, but near term, it's pretty much dead, diseased, and dying trees, with the idea being that we can reduce the opportunity for forest fires if we get all the waste litter off the floors. Technology validation, several years back, we had Leidos Engineering, kind of the gold standard in renewable or sustainable energy, come in and do a third-party evaluation of our technology. They confirmed what we thought or what we knew. I've been doing this, as I said, since 2009, so I have a pretty good grip on what we can and can't do. Here's the money slide for us. electrolysis. The most efficient system that we're aware of uses 52 kilowatt hours of electricity to produce 1 kilogram of hydrogen. It's also fairly thirsty, needs about 9 kilograms of water per kilogram of hydrogen. Obviously, that's a problem out in California or in most of the world nowadays. Water has become a fairly guarded commodity that we all need to respect and be aware of. Short story is we use about 1/10 the electricity that they use. We generate our own electricity, so we don't need to connect to the grid anywhere. Our operations are 24/7, 365. For electrolyzed hydrogen to be considered green, it has to come from a renewable energy source, such as wind or solar. Problem with those guys is the wind doesn't always blow and the sun only shines 8 or 9 hours a day. So they're not going to be able to operate in a base load capacity. Two definitions that we like to focus on. One is sustainable, the other is renewable. We're both. But the most important part of sustainability from our perspective is economics. If it's not economically viable and operationally predictable, 24/7, 365, I don't know why the heck you would ever deploy the technology to start with. We make a lot of bad decisions based on perceived opportunities. We don't do that. Ours is strictly based on economics. Operational advantages of hydrogen over traditional fossil. We can, or more specifically, battery electric, which is something that we just really started focusing on. It's become an issue out in California. They've tried to pass legislation that mandates that all heavy trucks have to be essentially net zero by 2032. With a heavy focus coming in even as early as next year. A lot of pushback on that. We've been looking at battery electric, where we can provide our hydrogen to generate electricity for some of the ports where this is really taking effect near term. But that's we're not sure where that's going to wash out. EPA, for some reason, has given some pushback to the state of California on that requirement. They set a lot of the standards for obviously vehicles that are in use nationwide. So we're watching that closely, but we think we've got a very efficient solution for either battery electric vehicles using our hydrogen or our syngas to charge in a charging station for those applications, or just using our traditional hydrogen in a fuel cell or an H2 internal combustion engine. I mentioned the I-5 corridor. This is kind of where this whole thing started with the Redding Rancheria tribe. Little city called Red Bluff. It's about 20 minutes south of Redding, California. If you look at it on the map to the right there, you'll notice that we're geographically almost in the center of the United States on the western corridor there. I-5 runs from San Diego up to Vancouver. So geographically, we thought it was important that you be able to service that entire roadway system. It's the second largest demographic in the United States as far as population. And an enormous amount of equipment comes in through the port of Long Beach and Los Angeles and is distributed along all those interstate corridors that you see there. Just made sense to kind of start there. We plan to go nationwide. We've got 31 additional locations. None of them are really locked in. They just follow the U.S. interstate system. And at all those locations, we can do a couple of things. The primary is obviously produce hydrogen. Secondarily, we can use our syngas to generate electricity at these facilities, or we can, take our syngas out in trailers and use those in charging facilities as well. Shipping, we're focused on maritime opportunities in Tampa, Florida is where we're kind of kicking that off. I'll give a little bit more color on that in just a second. Here's the most important kind of slide of the day. We're 40 to 70% less than our biggest competitor, which is electrolysis. We have a much more efficient system than conventional gasification. It's essentially thermal efficiency. We're about 1 trillion times more efficient than our closest competitor in the gasification space. And that's significant, and it's reflected in what it cost us to produce a kilogram of hydrogen. Our systems will operate on a 40% plus gross margin. That's actually a fairly conservative number. Some places we're able to get our biomass for less money. That number will go up significantly. In California today, this morning, hydrogen prices at the pump were $36 a kilogram. At our facility in Red Bluff, we intend to offer it at the pump at $5. And there's nobody else out there even having discussions like that today. This is just a kind of an overview of our plant economics. It's about $73 million to build a 12-ton-a-day plant. We've got it at $2 a kilogram, but we're actually under $2 a kilogram. Generates about $25 million in revenue, 61.4% EBITDA, significant job impact on local markets. We intend to pay our people very well. We have carbon offsets that we've not fully even begun to explore yet, and will continue to do so. Here's some of my team. We've got a really good group of guys. Hope that you guys have an opportunity to meet all these guys over the next couple of years. This is kind of what we're at. We're trying to raise about $9 million right now. And the idea is we've got some compliance issues that we need to address. We're finalizing and getting current on all of our filings this week. And we intend to uplist to NASDAQ sometime later this year. As I mentioned early on in the call, we've purchased our technology. It's a significant number. It's $100 million. We've got it on essentially a 5-year payout. We're paying about $4.6 million a year over that time, with a balloon payment at the end of the term. But we believe that once we uplist and we get our first facility up and operational, that we'll be able to just pay that off without any significant dilution to our shareholders. We still have some engineering things that we have to address. One of them is pipelines and distribution. Pipelines make most sense economically, but near term, that's problematic. We're going to have to use trailers. So we're working through that as we speak. Then obviously the obligatory G&A to keep food on the table of all the folks that are working with us. We do have to pay them. And lastly, here's our information on our contacts. David Wojtycki is he's our acting CFO. And Kevin DeLeon is a board member and works with a couple of our capital partners. One of them's a group called McCarville Capital Partners, a really good group of guys. Mark Komanowski is with Integris Communications. They handle all of our investor relations. Really good group of guys. You can reach any of those guys, and they'll get back to you instantly. Just tell them that Chris told you to call. That's us. And with that, I'll turn it back over to you, Robert.
Fantastic, Chris. Thanks so much. Went through a number of details sort of that I was thinking about heading into the presentation here. Maybe just talk about the base of the technology, some of the origins, again, why pyrolysis versus almost everyone else is sort of in the electrolysis area.
Yeah, that's the question that I get asked every day. I told you I'm doing probably 12 or 15 calls a day. That's why my name's not on this list here. I'm kind of I found the technology. I was the first outside investor in it. Back in the day, in 2009, there was no discussion of green hydrogen or of an opportunity in green hydrogen. There was just hydrogen. And back in '09, I think it was still around 85 million tons a year. And we were cost competitive with traditional hydrogen. And, you know, as with all energy, prices move up and down. At the time, natural gas prices were higher. We hadn't had the shale revolution, hadn't really kicked in yet. So we didn't have, and that's pretty remarkable that, you know, we're talking about something when we think, you know, the shale revolution it is so new, but it has had a deep impact on what's happened in the energy space, and it had a deep impact on us. So with those high prices, we were hyper competitive in the gray hydrogen space. Didn't know anything about green hydrogen, so never really came about. Electrolysis has been around for a long time, but it was just never cost competitive. So even though some of our competitors have been deploying it for a long time, they have not been successful in making it economic. And that's the difference between us and them. It's just pure economics. And we've offered our technology or to supply hydrogen to all of our competitors. It just makes sense for me to help them stay in business because this is a worldwide opportunity. It's not just limited, and no one company is going to be able to do it by themselves. There's going to have to be lots of support. Infrastructure is the weak link, and we'd like all of our competitors to obviously use our hydrogen at their facilities and help us distribute it. But that's why we're doing it. It's pure economics.
You sort of talked about the first facility being in California there. I know you have some lifting that needs to be done before it's kind of, you know, shovel the ground, but
Yeah.
you know, once it is, what is sort of the timeline that you sort of envision here once you're ready to begin?
I'll be honest with you. I believe we're going to be online in Tampa probably a year before we are even close to starting construction in California. California, there's no question that it is the market for green hydrogen in the United States. It's where this whole thing happened worldwide. It was actually catalyzed in California. But California, which I'm not speaking out of school here, everybody knows it's a challenge to do business in California. And the issues that we've gone through in permitting, and this is for a technology that they want in the state, green hydrogen. And they've got an initiative out there called CAL FIRE that actually supports using the biomass in the state to do exactly what we're doing. But there's just an enormous amount of regulations that have to be worked through. So my personal opinion, and it varies depending on who you're talking to in the company, but my opinion is that we'll be online in Tampa probably 12 months before. So I think we'll be online there in 6 months. But to directly answer your question, I think we're 18 to 24 months away, even though we've been in the process for 15 months out there to date. It's just a challenge to get through the regulatory issues in the state.
Certainly not the first person to make that comment. So I think you're speaking out of school there.
Right.
Well, look, Renee, I apologize, Chris, rather, we're sort of at the end of the time.
Yeah, no worries.
Let's leave it there. Again, I want to encourage everyone, if you've not already signed up for a one-on-one meeting, would like to do so, shoot me an email, Blum, BLUM at lythampartners.com. Again, visit the landing page for the conference, lythampartners.com/fall 2024. From there, you can click on the one-on-one registration, investor registration button. So again, Chris, thank you very much for the education.
Thank you, Robert. Thank you guys for having us.
Look forward to speaking with you again here in the future.
Yes, sir.
Take care.